Last week we talked about this bullish flag setup. So got a apex formation and talking about if we have a breakout of the flag, it's likely going to continue the uptrend and also heading to the next meaningful target, which is around 8,000. So not that far away. Here is 7,800. So only another 200 points. However, yesterday, that sort of violate the breakout. We got the breakout bar here, breakout from the apex formation. So that is the very classical flag and decreasing supply, breakout bar with localized increase of the volume. So everything looks quite normal. Next day, test bar doesn't really drop a lot. That's definitely the test bar. Here is the almost a violation bar. So in terms of the violation, I definitely want to take a closer look here. So something that I always emphasize is that this sort of the breakout bar will always be the key bar. So this is like a commitment bar to the upside. So if this bar get violated, then this breakout just got violated or just fail. However, how is the failure look like? Although we almost violated, but today is definitely violated. So here we got localized increase of the volume yesterday. Not that bad. So compared to this bar, even to here, so we still have decreasing of the supply. So that's why I'm not that concerned yet. And in terms of the whole flag setup, we still have a relatively strong flag structure, strong impulsive move, and very shallow pullback. So in terms of this kind of the pullback, if you put up the Fibonacci retracement, I bet is definitely not 30%. So let me quickly use which one? So extension. Okay, so that's a retracement. So something like this, 0, 38, 30%. So 38% is here. Here is roughly around 20% at best. So this is considered as a relatively shallow pullback, means that the bull is still in control. Okay, that's encouraging. However, we might need to adjust this a bit. So here the structure became also a flag, but that's still consolidating. So the apex formation just fell. Here we have a sideways movement. This bar before the US market opened during the European London session tested the swing low. Demand come in a little bit, but still that's just the beginning. We still need to wait until the market open, and that's the real move started, especially for the first hour. Then we sort of can confirm whether this is just a test or spring, or there shows some real commitment to break down. So in my email that I sent out yesterday, just before this session, so I always send out an email just get the market updates, talk about the immediate support zone 7700 to about I think I drag it all the way to 7760. So that's sort of like the zone, the first level of the defense. So that's 7760 is just based on the low of this breakout bar. So 7700 is just a psychological number, and sort of like halfway of this strong bullish momentum bar. So as long as this level is holding up, I believe that it's likely going to still go up and build up the handle and then to break out eventually. So most importantly, if you look at the volume, the supply has been decreasing, whereas yesterday been dropping. That's only localized increase of the supply. So unlike anything we have here or even here, so overall, this is still a relatively healthy a pullback. So for the last two sessions, I don't think that's very threatening. So this two bar here, is still considered as normal and relatively low volume, low supply level. So right now, in terms of the swing, a short-term swing, I would say that this is a sideways movement. So hopefully it could just bounce up from this swing low level, spring gate, and continue to go up. And in terms of the swing, well, we still have a flag structure. A breakout from here will have a continuation to the upside. So Jim say, is there any chance that the S&P will try to test July 29 low? Okay, let me see. Where is July 29? Okay. Oh, right. So at this moment, well, as of today, as of this point, chances is low. So I already talked about first because we have a relatively shallow pullback. Second, when this breakout bar fail, like yesterday failure, and then today continuation to go down, it comes with relatively low volume, low supply level. So this two sessions volume is unlike anything we have previously. So not like this, or even here, or even this two bar. So I think this is still a relatively good pullback or just healthy. So if there is a chance for the S&P 500 come all the way back to test this low here, this will be a very, very messy market, and it could actually turn out to become a distribution. So this is something that we don't really want to see. So before it happened, first thing, not saying that it will happen, but first thing that I want to see is a break below 7700 that comes with increasing of the volume, increasing of the supply level comparable to the past, and then come all the way back. So at this point, even if it break down below 7700, I still treat this zone here, so somewhere around 70 7500 to maybe 76,440. So this is the zone that will provide the support. And in fact, S&P 500 has all the right to have this kind of the pullback and then to have a larger consolidation, so without really violate the bullish structure. So this is something that we need to bear in mind. However, if it lost this zone, like break below 7500 here, okay, and means that it committed violate this bar, committed below. This is something going to be a bearish string and something that doesn't look great. So this is the time that we need to be alarmed and also be very cautious, lock in a profit, or even just exit earlier without triggering the stop loss, because that doesn't look great at all. So this two bar, the combo bar together, like as of 3rd of August, 4th of August. So this two bar will definitely the last level of defense. So we don't really want to see the price that will violate these two bars. Okay. However, it definitely has the right to come all the way back, test, bounce, and it will become another prolonged trading range. So another structure. However, another clue that we will get is the increasing of the supply level, so for the bearish case. But so far, just based on the past two sessions here, I don't think that will happen yet. Okay, so far this is still a relatively healthy structure. And also we talk about this is like a textbook style reaccumulation, textbook style fake breakdown, a spring setup, followed by a single strength rally, very shallow pullback. So if that bearish scenario really happen, then this is something that we need to be very alarmed. Okay, But so far, just based on the evidence shown up, low level supply, shallow pullback, I don't think that is the case yet. Okay, so yeah, so long term, that's definitely still up. Short term trading range, in terms of swing, that's still a bullish flag. So let's see whether it could just come up, bounce up from here, and then continue to go up.